You know, I want you to listen to this interesting piece. Nimesh has put down a list of the stocks that we so-called the H.R.I.T.I.K stocks.
Yeah.
The question is, they have underperformed, but now will they dance again? And after that, well, Nimesh may join in as well.
It's a dream, Nigel. I
it's
think
a dream
in our group, I think the Hritik and Salman are you both. Right? So after my link, both of you should go to the link and actually.
You know, the director is telling me that
so,
they won't show the graphics until you dance like Hritik.
So let them not show the graphics. But I'm not going to laugh with you. Okay. So let me go to the wall and explain as to what this Hritik means and why. And you know, it's not about only these leaders, but the theme of this somewhat was the leaders in every category has underperformed the mid caps and the broader market. So let me just go to the wall and explain what this means. You know, again, as I said, is this now going to be a time for Hritik to dance? Now, it's been 30 months of underperformance of the large cap names, and I'm putting out the 7 large names here: HDFC Bank, Reliance, Infosys, TCS, and Kotak Mahindra Bank. Look at the CAGR return in the last 30 months since April of 2021. HDFC Bank flat, Reliance just 5-6%, Infosys flat, TCS flat. The only outlier in this was ICICI Bank, which has given 26% return in the last 30 months in this pack. Now, just put that into context of what the markets have done. In the same period, in the last 30 months, Nifty and Sensex both have rallied 10.5%. The mid-cap index, the mid-cap 100 has rallied nearly 21%, and the small-cap index is up almost 20-odd%. So that's the kind of underperformance we've seen in these large-cap names. Now, compared to the peers as well, I've looked at the Salman, this is called the Salman pack, so to speak. Adani Enterprise, Adani Ports, L&T, M&M, NTPC, and Sun Pharma. These stocks have rallied anywhere between 38% to 50% in the same period. So again, compared to not only the indices, but even to the peers, the Hritik gang has actually underperformed. But if you look at the numbers, if you look at the earnings, that's not the case. The numbers have been quite supportive in terms of earnings. I've just looked at the 3-year CAGR for the Hritik pack. HDFC Bank, if you look at the revenue CAGR, 14%, PAT CAGR of now almost 19%. Reliance, again, 13% revenue CAGR, nearly 20% of PAT CAGR. Same is the case with TCS, Infosys, ICICI Bank, and Kotak Bank as well. All have done well in terms of not only revenues, but even in terms of PAT earnings. So that's the earnings profile. You know, the other perception is that these stocks have underperformed because of the FPI selling. I've looked at that data as well. In none of the companies we've seen a large FI selling. HDFC Bank should not be compared because post the merger, the holding has gone up. So even if you exclude that, look at Reliance, Infosys, TCS, the holding has been pretty much flat to just 1% down. Even in ICICI Bank, the holding has been pretty much flat. And even in Kotak Bank, while the stock has been massive underperformer, the FI holding has still retained at close to 48%. So that's the FPI holding in all these stocks. Now, what could be the triggers? Now, we all know that they have underperformed, but there are some massive triggers to watch out for these names, right? HDFC Bank, the biggest overhang of the merger is now out of the way. Now the focus will be in the earnings. So that's HDFC Bank. Even if you look at Reliance, that stock has underperformed despite the fact that in FY24, there's going to be a 13% EBITDA growth for Reliance. That's according to the Jefferies note. So that's a trigger there. Even in case of Infosys and TCS, most of the concerns with regards to the US recession seems to be behind. They're sitting on heavy cash as well, and they are good dividend plays as well. So that's the trigger for Infosys and TCS within the IT names. Even if you look at ICICI Bank, that's been the most consistent performer in terms of earnings, and still the stock has not done well. So there is an earnings support for ICICI Bank. And the last one is Kotak Bank. Even for Kotak Bank, in the last 1 year, the biggest overhang was the new CEO appointment. Now that is out of the way. They've appointed a new CEO, and Uday Kotak will step down at the end of the year. So there are massive triggers now, not only earnings, but news triggers as well for the Hritik gang to outperform. The theme this year was the large cap leaders have underperformed the mid cap and small cap. But now the question is, for the next Samvat, can these leaders come back and outperform the broader markets?
Well, splendid piece, Nimesh. You put it so well, and now we'll have to see whether or not the music will play, but who's going to dance and who's going to do the break dance as well. Anshul, we'll want your view on that. But for the time